Hello, Sector Watchers. Welcome to this 12th episode of Sector Spotlight on Tuesday, the 17th of December. This is your weekly update on sector rotation and anything remotely connected to sectors, relative strength, and/or rotational analysis. My name is Julius de Kempenaer, and I'm your host for today's show. With me are Rachel and Zach for production and technology as usual. If you want to participate, the chat box is open during the show, and we will monitor what's coming in. However, email seems to be the preferred way of communicating for most of us, and that is fine. Just don't be shy. This is Sector Spotlight. Today, we will be covering our usual sector view overview. The plan is to go a little bit deeper into the 30 stocks of the Dow Jones Industrials and look at their rotation. We'll have a break. We'll have at least one question that came in over the mail, and we'll have the usual pair trade idea. Now, before we continue, I want to show you that we actually have the chat box open during the show. It's located on the right-hand side of the player that you're watching right now. There is a Q&A and there is polls. If you type your question there, it'll pop up, and Rachel or myself, if possible, will look at it and deal with it during the show when we have time. So don't be shy. Help us to make this as interactive as possible. Let's go to some charts and RRGs. Start with that one on the left and the usual one here on the right. If we bring this up, this is, let me put the asset classes first. We had a pretty good week for commodities. That's the best performing asset class, followed by the S&P 500, and real estate sticks to the far right weak and side of that performance overview. If we do it on a relative basis, we'll see that commodities and equities are the right stuff, are performing well. Fixed income stuff, and especially real estate, is on the right-hand side. Quick look at the RRG that belongs to this performance, and we'll see that SPY equities is still solidly on the right-hand side, continuing almost horizontal for 4 or 5 weeks already now. It's a very stable trend, very stable outperformance of the VBI/NX benchmark. We'll have commodities still pointing down on the weekly RRG, but it is actually improving, as you've seen on this performance overview here. So on the dailies, it looks a lot better. We'll stick with the weeklies for now here on the RRG, and then we got all the fixed income stuff and real estate inside the lagging quadrant. So what this pretty much is telling you that you, in your investment portfolio, it would be very irresponsible not to have any holdings in equities, not to say that you should have an overweight position in equities. If we stick with equities and we go look at the various sectors that we are tracking, these are the S&P Spiders, the State Street Spiders sector range. Overall performance last week, pretty good. Only one with a negative performance, so that is real estate. Let's bring up the RRG that belongs to this group, and we'll see a picture that is sort of unchanged to what we've been monitoring over the last, I don't know, maybe 8 weeks already. I mean, this S&P is still steady going higher. The performance here, this is in absolute terms. If we make that relative, so we make it relative to the S&P 500, we'll see that the last week, and this is interesting, the positive performance is only coming from like three groups. Technology, energy, and healthcare are the only three that are outperforming the S&P 500. All others are lagging the S&P 500. And again, no surprise, especially the real estate sector. That translates into an RRG with the leading quadrant dominated by healthcare, financials, and still technology, despite that little rollover. And then the industrials trail. That's kind of funny. I've not seen that very often. And we went in there. It looked all very good, and now we are now sort of zigzagging our way down. Right, we're sort of right in the middle right there. So I am not sure what to think of this. I mean, if we bring up the chart for XLI here on the right, that is still a good chart. I mean, there's no problem with that. It's still above that resistance level, but it's not really pushing through. And the relative is well, not good. I mean, this is breaking below this 3 low support area. RRG lines are rolling over. So I'm a bit cautious with that industrials type stuff. And then it's very clear where we should not be positioned right now, because that's real estate, that is utilities, that is discretionary, that is staples, that is materials. And then we got communication services is sort of curling back up. But this whole list here, from real estate all the way to materials, are sort of real no-go areas at the moment. And I've told you this in many of my presentations and longer-term presentations, that it is very often much more important knowing where you should not be positioned than focusing on where you should be positioned. And I think this is a very good example. This RRG is showing you 1, 2, 3, 4, 5 out of the 11 sectors that are in lagging, and they are pointing to more weakness ahead. So if you have a portfolio and you avoid holdings in these areas, you'll probably be coming out ahead of the S&P 500. I don't want to spend too much time on the sectors this week. Not a lot changed. The trends are there. What I would like to do is go have a better look at the rotations in the Dow Jones Industrials. And you can bring that rotation up. And it's a predefined group, actually, if you look at the Dow Jones Industrials here. And then we'll bring up some charts here. The first one I know is Apple. Let's just go over a couple of stocks that I think are worthwhile keeping an eye on, and the ones that we should avoid. And again, we can do that very nicely by just selecting these tails here, and you can play around with the tail length to make it even more. Six periods looks kind of nice. You see, Apple on the RS ratio is still the strongest stock in the Dow Jones Industrials, but it is rolling over. It's starting to lose a little bit of momentum. And if you look at the chart, I mean, this is one straight line up pretty much since mid-2019, mid of this year. But the uptrend is clearly there since the start of the year, almost literally since the start of the year. So there is nothing wrong with it, but if you're looking to rotate to something else, then it might be a good time to at least take partial profits, because it looks like we have a little bit of a rotation going on in Apple. Intel, similar, very good stock, but rolling over. JP Morgan, this is like follow the leader. I mean, this is the financial sector, as we know. We looked at it last week. Is a very strong sector at the moment. And if you look at JP Morgan, that's one of the strongest stocks inside the Dow. It's traveling at, what's that, 80 degrees on the heading, which is still strong. It's very stable. So this is a stock that probably could deserve a spot in any portfolio. And the good news is that we are breaking above this horizontal resistance level at the time. So that could be a new bit of fuel for at least this relative rally that is going on. Let's move quickly to a few others. So here's Dow starting to go down. UNH, this is one of the stronger stocks inside this universe. UNH, especially because it's now breaking out above that high out of 2018. And if you look at the relative, that is started bottoming out. We've broken this downtrend line, and we're now breaking these highs that we saw in May and June of this year. Both RRG lines above. So especially the break above this previous high now gives this a very good risk-reward position, because the upside is sort of unlimited, and we have good solid support around 280. So especially this long tail sends good signs for UNH. Go on, Caterpillar, UTX. No. Here we have Microsoft and Goldman Sachs. These are two very good stocks because they were good, went into weakening, and are now both rotating back up, which is, as you know, a good thing because it's the second or the third leg of an uptrend. So let's start with Microsoft first. Here you see that this trend is still solidly there. We're breaking. It's been so strong that it's very hard to see, but we are breaking to new highs on the relative, and we've put in a low on the RS ratio, and RS momentum is now getting back above 100, and we will see something almost similar for Goldman Sachs, which broke out of a consolidation pattern that took a couple of months, and I think I like Goldman a little bit better than Microsoft because this is a longer base and we're trying to get out of this base right now. We're pretty close to the 100 level, but the lines are pointing up. Together with this break, I think that Goldman, and it is part of the financial sector, which is doing very well, could have some nice performance in store towards the end of the year and starting the new year. So that's a good one. And then we go into the improving quadrant. PFE, looking good, but it's very early, so I'll be very careful with this one. Exxon going down, not very good. The last observation here is kind of moving sideways. Not very happy with that one. And then we've got American Express financials moving into the right direction. That looks good. Chart not that well yet. Triple M does not have the right heading. Disney is very good. It's the only thing is that it has already done a lot, but it's now breaking out above its previous high again, and it's getting support at the 145 level. We need to push above this resistance in relative strength to make it really worthwhile, but it is definitely one of the better stocks from a relative perspective in this universe. The long-term chart, the monthly chart of Disney is actually looking really, really nice. Now we got J&J, Johnson & Johnson. That is a very nice chart. Let's quickly look at that one. It's, you know, this downtrend line has been broken. We're pushing towards this resistance area. And what I really like is the fact that we're now here bottoming out on this relative line. If this momentum can keep up and push J&J towards and into the leading quadrant, this could be one of the next leaders inside the Dow. And then the weak stuff, Home Depot is something that you really need to be careful with, I think. That sort of completed this toppish formation. We broke this rising support line, and we definitely broke support in the relative strength line, and these RRG lines are now rapidly pointing lower. So it looks like as if this is only a matter of time because this one moves into the lagging quadrant. So be very careful with Home Depot at the moment. Let's move on to Nike. That chart is actually not too bad, so I'm still okay with Nike. PG, similar. You see that it's already starting to curl up. It's coming into the danger zone. It's coming pretty close to the 100 area, but for the time being, I give it the benefit of the doubt. Walmart, not fantastic. Let's speed up here. VZ, not fantastic. Cisco, weakest stock in the Dow, kind of crazy rotation here. But the fact that it is so low, it's below 90 on the RS ratio. It's the lowest stock inside the Dow measured on RS ratio. So I stay away from that one for the time being. Then we got Travelers, we got MCD. BA, that is one that you should really be very careful with. If you look at BA, it's a very clear signal on the RRG. It's pushing further into the lagging quadrant. But look at the relative here. That is broken already. And if you look at the price chart, as soon, I think, as we break that, let's say 318 level, it's all the way down to 280. And if it drops below 280, I don't know what's going to happen. But this is really a stock that is under serious pressure. And relative strength has already given way. So from a relative perspective, even if this holds, this support level, I think BA is a stock that is better be avoided for the time being. Similar for IBM, that is pushing further into the lagging quadrant. And then we got CVX turning up. We need a little bit more time with that. KO, Coca-Cola, similar there. V, Merck, and then these were all the stocks. So I'll get back to the Dow stocks later on because I got my pair trade figure out on these. But before we do that, we're going to have a short break, and then I'll answer at least one question that came in over the mail. So we're back, and let's see, we have some questions that came in. Let's see if I can really quickly address those. Richard asked, do you favor sector positions moving from lagging into improving, or improving moving into leading as potential buying points? I talked a lot about that, and there's no real solid rule. The best way to explain this is how aggressive do you want to be? When a sector moves from improving into leading, then there is already quite some move underway. And if you go from lagging into improving, then you're very early. And I always try to compare that to, do you want to trade with a 5-day or a 50-day moving average? You know, from lagging to improving is your 5-day moving average, and from improving to leading is your 50-day moving average. You know, your 5-day got a lot of signals, but you'll be very early, but you'll be wrong more often. If you use 50 days, you will be late, but you'll be right more often. So it's a little bit of a trade-off. I am more looking at heading, and it's too long to explain now, but I've explained it in other videos. I like headings between 0 and 90 degrees. So if there is a strong heading inside the improving quadrant, moving towards leading, not too far away from the 100 level, that's probably where the sweet spot would be. And then, of course, the strong headings inside weakening and turning back to leading. These are more reliable. So next question is, what do you think about cryptos as an asset class to be invested in? I mean, cryptos for me it's too big to be ignored, but I'm not 100% sure whether it is the next big thing going forward, because so many issues going on. I like the trading element of it because it's pure fear and greed. There's almost no fundamentals there. So everything that you see on those charts is pure human emotions and human behavior. So they're perfectly suited for technical analysis. Whether I think if I were to run a bigger portfolio, I'd probably just put a couple of % in there just to be invested. And I think it's probably decorrelated with equity, so it could be a nice diversification. I wouldn't put all my money on it, or at least not a big portion of it. Let me see, the best way to use percentage change on RRG. You're talking about this column here. That is a cosmetic column. What it does, it measures the percentage change over the tail length. So now we're looking at a 6-week tail length here. So these percentage numbers are the percentages since the start of the tail. So Apple did 8.1% since this point here over 6 weeks. If I would change this to, let's say, a maximum of 30 weeks, then Apple did 58%. So this is 58%. And by the way, this is a very nice example of how something that is good drops into weakening and rotates back is very strong. And we can actually see how strong that was, because let me say, so here we got in there. That's 39% since it came back from weakening into leading until now. And the Dow did 10%. So that's a very decent outperformance over the Dow. So that percentage column is cosmetic. It is tied to the tail length, and I use it for just sorting it every now and then and seeing, so over this 17-week period, the Dow is here. These are all outperformers. These are underperformers. If I make it, I don't know, 4 or 5 weeks, then, this is my list. So it's cosmetic. It helps you sort through. There's no other way of using it. It's just keeping track of what's going on. Oh, we got a lot of questions this time. Well, that's cool. No problem. Internationals are starting to pick up strength. How does IDV look on an RRG chart? Well, I have no idea. Let's see what IDV is. iShares International, that's a dangerous one because I don't know what international means. I mean, is that anything outside the US? Is it, I don't know exactly what it is, but it already had a pretty good move. It's now rolling over a little bit. Let me bring up that chart here. IDV. Well, there you go. Looks to be bottoming out. Getting there. I don't know what it is again, but when I look at international stuff, I like to look at my predefined group, which is international stock market indexes. That gives me a pretty good glimpse of what's going on. And then you see the center of the chart is the Dow Jones Global, and you see a number of other country indexes scattered around the Dow Jones Global. The S&P is inside weakening and just started to move a little bit to the left. So that's how I look at the international stuff. But look at Europe starting to improve. Russia hooked back up. Japan still very strong. And we got India back on track to move into the leading quadrant. So there are definitely a couple of diversification options outside the US if you want to diversify away from US stocks. And then what do you recommend if I have ETF in lagging? Well, let's put this big disclaimer in here that I'm not an advisor. I'm certainly not your advisor. I will share some ideas with you, but at the end of the day, you have to make your own decisions about how you're going to implement that. And the other thing is that in my view, in my perspective of financial markets, I think that analytics and portfolio construction are two really different things. And I did write a blog about that not too long ago. Let's see if I can quickly bring that up. The title of that blog is actually Analysis and Portfolio Construction are two completely different animals in the same zoo. Let's look at animals. It's probably a pretty unique word in StockCharts. Oh, animate. Okay, where is that? That's going to take too long. Look for portfolio construction in it's either the RRG blog or Chart Watchers. No, it's blog articles. Here it is. Market analysis and portfolio construction are two completely different animals in the same zoo. It's a pretty long blog, and I explain how I look at analytics versus portfolio construction and how the two are related, but yet are two different things. So I honestly wouldn't be able to answer, when you have an ETF in lagging, what ETF is it? What is the underlying? There are too many questions, too many variables to give you a decent answer on that question. We got 5-6 more minutes. We need to go to the pair trade idea. And then let's go back to my Dow Jones chart, because I identified a number of good and bad tickers. And let me put those on. I liked UNH. I liked GS. I liked J&J. I liked Microsoft, and I did not like HD and BA. It's probably the ones that I wanted to show you. So now this is cleaned up a little bit. So what you see is I took a little subset of what we were looking at to come up with some pair trade idea. What I do is I try to look for stuff that is the long side moving from the lower left to the top right, And for the short side, what's just moving from the top right to the lower left. So UNH, GS, MSFT would be good candidates for long positions, including J&J, and then BA and HD are the ones that I've identified as the best for the leg at the short side. For a final check, I will always look at the relative line itself. So let's do that for, if we do the most obvious one would be UNH to BA. So if we do UNH over Boeing, and then I want to change this chart into this, and I want a line chart like this, and we'll do a weekly because that's pretty much the time frame that we're using here. And now you see that this is very nice, but it's actually picking up this massive rise. So there is a long move underway already, and that's what you see, because when these two crossed, so something like this is pretty much the ideal situation. The only problem is we're only here on Tuesday, so I gotta pick what the market throws at me at this point in time. But if you look at the position here, that's November 25th, that would be here. When you just broke above that, that would be the ideal situation to get in, and then you would, obviously stick with that move right now. This is a pretty safe bet. There's a risk that we got a little bit of a hiccup going forward, but the trends are very clear. If you want to be a little bit more adventurous and a little bit more upside potential, then probably your GS versus HD or BA would be a good bet. So if we do Microsoft versus BA, then you get something like this. Very nice chart from a relative point of view, breakout, good trend, a little bit of a run up there. If we would swap the short position for Home Depot, then this is what you get. Also a breakout, but already a long run underway. That is the one that I'm going to stick with, and especially because if you lengthen this period a little bit, then you see why I like this. This is the one that I came up. If we change Microsoft versus BA over the same period, you see that this is a long run up. I mean, this is definitely a good move, but the question is, how sustainable is it? If I swap Microsoft for GS versus BA, because BA is well, there are no sure bets in this world, but I think really BA is very weak. And then if I look at this, then I see a nice rounding. I see this big downtrend. I see almost a year of consolidation. We broke this horizontal level. We are starting this series of higher highs and higher lows, which I think is really, really cool. So I think that this is right now a pretty good situation for a pair trade inside the Dow Jones Industrial. So my pair trade for this week is being long Goldman Sachs around 230 and short British Airways at 323, which will be the pair trade for the week. And that actually concludes this 12th episode of Sector Spotlight. And I want to thank you for watching. Please don't be a stranger and stay in touch. Sector Spotlight airs every Tuesday, 10:30 to 11 a.m. Eastern. We'll not be having any live shows on the 24th and the 31st. There'll be an evergreen that I'm going to record this week, and will be a replay on the other date. So I'm going to wish you happy holidays and a very good start of the new year from this position. And meanwhile, if you want to read more about sectors and RRGs, please go to the RRG blog on StockCharts.com, or even better, subscribe using the link below each article to make sure that you'll receive a nudge every time a new article is posted. See you next year.